Okay, all I'm trying to do is inspire you to read price from a classical point of view without indicators, completely naked. Nothing in here, like this little red line down here, that's not an indicator. All that is the NASDAQ. It's the price on, let me get this here. It's a line chart. And the way you get that and how you get that, just take it off and I'll let you see how we do it. We got a couple minutes still till 8:30. You go up to your little plus symbol here on TradingView. You click on that. Be mindful that you're looking at the chart that you're not going to load back up. In other words, I'm plotting S&P. So ES is the chart, so I want to compare it to NASDAQ. So you would do the same thing here. You would type out the front month code for the index that you want to compare it to. You can do this with the Dow too. Like if you wanted to put the Dow up, you put YMH for the month code for November. I'm sorry, for March. November, good grief. 2023. Okay, and if I did that, it's plotting it over top. You don't want that. So you untoggle it and click on New Pane, and it'll plot it down here. Now, if you want to add the NASDAQ in addition to, you can put NQH2023. Now, when a March contract expires, you would change the H to M for the delivery month of June. Okay, and then you plot that. And then again, it's plotting over top, but you don't want to do that. You want to go to New Pane. All right, and then what you would do is if you want to compare, like if you're looking for market breadth to continue working lower, you would be comparing the highs. So you would click on the toggle box here. On your price source, you would go to high. Okay, and then here for the NASDAQ, same thing. You would go to high. And what that's doing is it's plotting, I don't like the light blue color. It's plotting the relationship of all of the highs. So you can comparatively study the difference in relationships between all the price highs that of ES, that's the trading market. I'm trading that market, but I'm looking at the relationships between how the market has priced in specific highs and lows relative to the Dow, which is the only real use for me as a trader. I don't trade the Dow. And then you have the NASDAQ. So I'm looking at the relationships between the highs in one pair, oh, not one pair, but in one market versus the other. And what do I mean by it? What's the benefit of doing something like this? If you look at the relationship of these highs here on NASDAQ with that of Dow, and then the E-mini S&P. So you can see that the S&P looked stronger here, and it was, relatively speaking, but it was just running up into take stops. And how do you know it's a stop run? When you start seeing weakness across the averages like this. And this is simply just Dow theory. And I like to look at that to confirm market breadth. Does the market offer the likelihood of a continued price move higher or lower? Okay. And about 25 seconds or so, we have some news coming in. It's not terribly exciting in my opinion, but we'll watch and see. But that's how you add those things. They're not indicators. That's not an oscillator. It's nothing, I don't use indicators. Okay, but I'm looking at the relationships between the averages, and that'll help me many times ferret out an idea, or at least that's the plan, right?